Welcome back to the Deal Room, the podcast where we bring real stories and real strategies for investors, operators, and leaders across real estate world. I'm your host, Heyshan Pires. Today we are driving into the world of multifamily investing with someone who has scaled far beyond the typical path. My guest, Ricardo Sanabria, is the founder of Fin Capital Investments and has completed over 200 million in multifamily acquisitions across the Southeast. Ricardo, welcome to the show.
Thank you so much. Appreciate it.
All right, let's start your story. You built a significant multifamily portfolio, but you didn't start there. Can you share how you got into real estate and what your early journey looked like?
Of course, I'm originally from Colombia, so that's where my family was doing a lot of business back in the day, and they were involved in different real estate strategies, industrial, single family. So that's how I started getting, I guess, involved in the space. I also have a culinary background, so I was involved in restaurants, which had a component of real estate that we had a food hall back in Colombia where we would rent it out to small restaurant owners. So I started getting involved in different aspects of real estate, but I guess looking to expand and scale and looking for opportunities, that's when I started identifying apartment buildings, multi-unit rentals like multifamily in the US. And that's how we started pivoting into the multifamily space.
Very good. Why multifamily? And why Southeast? Why in that region? Any particular reason?
Yeah, that's a great question. So, since we're in the single family space, like a lot of single family investors, there's some challenges, right? Of just having one tenant in that roof. Once it's full, it's 100% occupied. But if that single tenant leaves, then you're 100% vacant. So we were experiencing a lot of that volatility in the single family space. And in multifamily, you get protected by multiple people or tenants in your property. So if you have a 100-unit apartment building, 10 of them can leave and you're still 90% occupied. So that's really one of the main things that we like about multifamily and why we pivoted. And the markets, we've really just been analyzing, like a lot of investors. The Southeast has been growing in population for the last years. There's a lot of migration of employers. A lot of headquarters are moving to the Southeast, which brings employees and employment to those markets. And at the end of the day, those are our tenants. We need
Yes.
hardworking people that have stable income, stable employment in order to live in some of these apartment buildings. So we see a lot of that growth in the Southeast. So that's mainly where we focus on that area of the country.
Very good. Something that stood out to me during our last conversation, Ricardo, is that you had a long pause. I think 2022, you were purchasing, and then you had a pause for about 2 years. Why did you pause? What was the reason for the long pause for an active operator like you?
Of course, like a lot of us in the space, 2022, 2023, we saw one of the, I guess, most aggressive rate hikes in the history of the country, which really just paused all activity, at least in this space, drastically, right? There was a lot of volatility in interest rates, which impacts debt, impacts valuations. So it was very hard to make sense of deals and acquisitions or even refinances or dispositions. So we hit a pause during that time, waiting for a little bit more stability in the market. But we didn't stop there. We pivoted into something else. We basically started just growing internally our team. We focused on operations. So we leveraged our experience and presence in Colombia to build our asset management team, our investor relations team, and grow our investor network as well during this period. So it wasn't all no acquisitions, but at least we were growing operationally and internally in the company.
That's great. That's a great segue to my next question. And this is something that you shared previously as well about the Colombia based team that you put together to run your operations. You did all this during your downtime. It's not like you didn't do anything. You were pretty and stabilizing your business during that period. So, would you mind talking about that a little bit? How that worked out for you with having that team in Colombia?
Of course. So Yeah, given the opportunity that we had of, okay, we're not buying anything, we're not selling everything. We focus on expanding our team. We scaled very quickly as well, which brings its own set of challenges operationally. So we started building our asset management team. We have a team of 5 asset managers out of Colombia right now that they're all fluent in English. They've all studied business, finances, accounting, and they travel constantly to the properties and the markets that we operate in. So that was a very interesting experience. And I think we just took advantage of that opportunity, of that downtime, like you're saying, to
Mhm.
really scale the asset management team and then also investor relations as well. So we would have better reporting to our investors, whether it be English speaking or Spanish speaking investors, and just growing the firm operationally.
Fantastic. What are some of the challenges that you have come across and how have you navigated through them? I think it would be good information for somebody who's getting started, somebody who's new, where they see these challenges and think, oh my, I can't do this. But you have overcome those challenges or figured out how to navigate around them. Do you want to give maybe an example of a challenge that you navigated through?
Of course, of course. You need to build a good team. That's my recommendation for everybody starting out. Have a good team of partners that have already gone through a lot of, I guess, cycles. If you want to call market cycles or experiences in different business ventures that can bring value to your team. Because at the end of the day, if you're just starting out, there's a lot of things that you might not know about its specific aspects. In this case, about multifamily investing, operations, navigating a difficult market like the last few years. So I think that having a good team is very important, and I think we are very fortunate that we've had a very strong team of partners and staff members, team members within our company that really helped us navigate challenging times, especially like I said, the last few years. To give you an example, the operations, right? Like when you
Absolutely.
scale that quickly, and you're an early firm that is buying assets, and then you have 2,000 units over 14 properties to operate. Obviously, you have third party property management because if you're doing self management, that's a whole different ballgame.
Yeah.
But
Yeah.
if you're using a third party property management company like we did, you still have to oversee a lot of the work that they're doing. They need a lot of answers from ownership as well to make decisions on whether we're going to renovate X amount of units or what kind of vendors we're going to be hiring. And having a strong team is very important because once you start scaling, if you don't have that team to support it, then you'll start encountering some of these operational challenges.
Absolutely. And Ricardo, something that you also mentioned is that you have to learn how to adjust to different times. I think that that's a key, and that's something you have done tremendously during the last 2, 3 years, adjusting to the interest rates, market volatility. What does the market look like now and going into the future? What do you see? What challenges do you see for the real estate market?
Yep, yep, yep. Well, great question. I mean, obviously, we're starting to see a little bit more stability than the last few years. I'm not saying it's 100% stable. Inflation was starting to get under control, and now the recent data has already showing an increase of inflation again. So that brings a little bit of instability back into the market. But generally speaking, we've seen more stability. Nobody can foresee the future, obviously, but we anticipate that momentum to continue in the upcoming future. And what we're also seeing is there's been a disconnect between sellers and buyers for the last few years. Again, because of this volatility in interest rates and how valuations are being put together for either a sale or a purchase. Now we're starting to see some sellers and buyers to meet in the middle, right? To adjust price where the seller obviously understands where the current market is and where the debt is being priced at. Because that's really where we do a lot of our underwriting for the cost basis or the purchase price that we're going to be offering for a specific asset. So we're starting to see that. Obviously, there's a lot of pain still that is coming out of these last 2, 3 years. So a lot of these sellers are having to sell whether they like it or not because of loan maturity coming up, their debt is expiring. So that's starting to force some of the sellers to really understand that you have to meet somewhere in order for acquisitions to make sense from a buyer's perspective. So we're
Right.
seeing that hopefully the market will continue to
Yep.
stabilize and we can start seeing more liquidity and activity in the space.
Very good. A lot of listeners are like me, Ricardo. They start with single family and eventually we want to step into multifamily. What advice would you give someone preparing for that jump, going from single family to multifamily?
Of course, like I was saying earlier, your team, build your team, have somebody that's gone through the process, that's bought properties, operated properties, sold properties, navigated difficult markets. Once you have that team put together, it's going to make it an easier transition. Because if not, then you're going to be navigating a lot of uncertainty. There'll be a lot of lessons learned, which is good. Learning lessons sometimes the hard way is a good way of learning, but you can really check a lot of boxes and avoid some of those pitfalls, or at least be a little bit more conservative with those pitfalls if you build a strong team that can bring value, right, to that
Correct.
transition that you're doing from single family to multifamily.
Correct. And learning from individuals like you. This listening to this podcast right here is a start in a lot of advice coming through from someone who has done this for many, many years. Having a good team, as you said, is very, very important. It's crucial.
So of course.
Ricardo, before we wrap up, I have one final question. This is the question I ask from everybody. I want to touch something that's transforming every industry right now. It's AI. How does that affect the multifamily space, then your company as well?
Yeah, great question, because that's or at least should be on everybody's mind in whatever business venture that you're doing, and even in personal side of things, right?
Yes.
AI has just come to add a lot of value in our lives, I believe, and it's impacting business in a very dramatic way very quickly, because I think it's changing at a very, very, very fast pace in the multifamily space, and I would just say real estate, generally speaking. We're seeing a lot of changes in the financial analysis side of things, underwriting. There's a lot of Excel models that have been used throughout the years that now AI and AI agents are pretty much doing for you in very, very quick speed, and double checking things, reducing that human errors when you're seeing so many numbers to
Yeah.
analyze a property. So we've implemented that in our firm as well. There's always going to be a human factor, in my opinion, at least to the technology that we have today. But underwriting, we're doing all of our underwriting through AI right now. Investor reporting. So, all the reports that we get from property management companies are going through an AI agent that's analyzing everything. And it doesn't only allow us to follow our KPIs on a weekly basis on operations, but we can start building our investor reports through that information at the same time. So it's becoming like this ecosystem where everything is just getting kind of like centralized through our AI platform, and it's helping to speed things up a lot. I think that, again, not just real estate, any venture that anybody's doing in business should leverage the advantages that AI is bringing to the world right now. It's unbelievable.
Very good. Ricardo, it has been an incredible conversation. Your journey from single family, $200 million of multifamily portfolio, your ability to pivot during the tough markets, the way you build a cross-border team, it's inspiring and full of lessons for investors at every level. Where can listeners connect with you or learn about your Fin Capital investments?
Our website is www.fincapitalinvestments.com. There's a lot of information there about what we've done. Think Capital Invest on Instagram. I'm on LinkedIn as RJ Sanabria. You can reach out through any of those channels. Happy to help anybody or guide anybody that's looking to jump into the roller coaster of multifamily investing. But yeah, very excited. And thank you so much for the opportunity to share our story with everybody. Hey, Shan, it's because of people that this information gets out there. So we really appreciate it.
Thank you, Ricardo. I appreciate it. I appreciate your time giving all this advice to our new real estate investors.
Yeah.
Thanks again for joining us. And to our listeners, if you enjoyed this episode, make sure to subscribe, leave a review, and share it with someone who's thinking about getting into multifamily. Thank you.